For years, every global crisis has raised the same question for emerging markets. Who breaks first? The COVID-19 pandemic, the US Federal Reserve's rate hikes, banking stress in America, oil shocks, and trade wars have all tested large emerging economies. And yet, according to Moody's ratings, India has managed to withstand these shocks better than most of its peers. In fact, Moody's ratings recently said India has been the most resilient large emerging market economy since 2020. In its latest report, Moody's said India's biggest strength has been its large foreign exchange reserves. These reserves helped contain currency volatility and maintain investor confidence even during periods of extreme global uncertainty. The report studied how emerging economies performed during four major stress episodes: the COVID-19 shock in 2020, the US Fed tightening cycle in 2022, the American regional banking crisis in 2023, and fresh tariff tensions in 2025. Countries such as Brazil, South Africa, Indonesia, Mexico, and Turkey were part of the assessment. According to the agency, India now has clearer monetary policy frameworks, relatively anchored inflation expectations, and deep domestic financial markets that reduce dependence on volatile foreign funding. In simple terms, India is seen as better prepared than many of its peers to absorb external shocks. But the report also carries a caution flag. Moody's said India's high debt burden and weak fiscal balance remain major vulnerabilities. This means that if global shocks keep coming one after another, the government's room to respond could become limited. That concern is already showing up in growth forecasts. Just weeks ago, Moody's cut India's FY27 GDP growth estimate from 6.8% to 6%, citing rising energy prices and the escalating West Asian conflict. The agency warned that disruptions through the Strait of Hormuz could sharply raise India's oil and gas import bill, widen the trade deficit, and push inflation higher. The report also warned that higher fuel and fertilizer costs could hurt consumption, industrial activity, and agriculture, while weaker remittances from Gulf countries may add further pressure on India's economy. For now, Moody's believes India has the buffers to withstand global turbulence, even in the near future. But the message is clear: India may be better placed than many emerging markets, but high debt and external risks remain key challenges. Follow Business Standard for more such stories.